The U.S. stock market is currently closed. As of the market close on Friday, September 19, 2025, at 4 p.m. EDT, BigBear.ai Holdings, Inc., trading under the ticker symbol BBAI, closed at a price of $6.85. This represented a significant intraday gain of 9.08%, a surge that has many investors talking. But the immediate thrill of that daily pop obscures a much more complicated and frankly unsettling reality for this artificial intelligence analytics company. The common belief is that in the current climate, any company with AI in its name is a golden ticket, a direct participant in one of the most significant technological shifts of our time. This broad-stroke assumption paints a picture of unstoppable growth and boundless potential. However, a closer look at BigBear.ai reveals stark contrast between this high-flying expectation and the underlying financial and operational truths of the business. The reality is that BigBear.ai is a company grappling with significant challenges, including declining revenues and widening losses, making its recent stock performance a fascinating case study in market sentiment versus fundamental health. The recent upward momentum in BigBear.ai's stock price seems to be largely driven by the broader euphoria surrounding artificial intelligence. Stocks with any connection to AI, like Nvidia stock and even the broader tech components of Fidelity ETFs, have seen immense interest from both retail and institutional investors. This has created a rising tide that has lifted many boats, including BigBear.ai. The narrative is powerful. As governments and corporations pour billions into AI infrastructure and software, a company like BigBear.ai, which provides AI-powered logistics and analytics, should be a prime beneficiary. The company itself touts a massive total addressable market, projecting it to grow from $80 billion in 2024 to a staggering $272 billion by 2028. A significant portion of this is expected to come from U.S. government contracts, particularly in the defense sector, a market that could be worth up to $70 billion by the mid-2030s. This is the story that has captured the imagination of many who are self-investing through platforms like Robinhood, SoFi Invest, and Interactive Brokers, looking for the next big winner in the tech space. However, the operational reality of BigBear.ai tells a very different story, one that should give any prudent investor pause. The company's recent financial performance has been less than stellar. In the second quarter of 2025, BigBear.ai reported a year-over-year revenue decline of 18% to $32.5 million. This wasn't an isolated incident. It followed another revenue drop in the first quarter. The situation was concerning enough for the company's management to slash its full-year revenue guidance to approximately $132 million, a 22% reduction from the midpoint of their previous forecast. The primary culprit for this decline was cited as lower sales volumes from some government contracts. This is a critical point of concern, as a significant portion of the bullish thesis for BigBear.ai rests on its ability to secure and expand these government partnerships. Digging deeper into the financials reveals even more reasons for caution. The company's gross margins have been contracting, falling to 25% in the second quarter from nearly 28% in the same period a year prior. This indicates a potential decrease in the profitability of its core operations. More alarmingly, BigBear.ai is not just unprofitable, its losses are widening. The company's non-GAAP adjusted EBITDA came in at a loss of $8.5 million for the quarter, a substantial deterioration from the $3.7 million loss in the second quarter of the previous year. This financial picture is a far cry from the explosive growth narrative that has been fueling the stock's ascent. While investors using online investment platforms are often drawn to high-growth stories, the numbers for BigBear.ai suggest a company that is struggling to translate its AI branding into tangible financial success. It is this disconnect that creates a significant risk for those who are solely focused on the stock's recent price action. The composition of BigBear.ai's investor base also provides some interesting insights. Institutional ownership stands at around 34%, with major players like BlackRock and Vanguard holding significant positions. While the presence of these large institutions can lend an air of credibility, it's also worth noting that there has been significant insider selling over the past few months. This is a red flag that can't be ignored. When those with the most intimate knowledge of a company are selling their shares, it often signals a lack of confidence in the future prospects of the business. For the individual investor, particularly those who are just starting with online investing or using platforms like Schwab Intelligent Portfolios, this is a crucial piece of information to consider. The actions of insiders can often be a more telling indicator of a company's health than the most bullish analyst report. Speaking of analysts, their views on BigBear.ai are mixed. While there is a consensus buy rating, the price targets vary, and the underlying commentary reveals a degree of caution. Bulls point to the company's substantial backlog of contracts as a sign of future revenue, but bears are quick to highlight the reduced revenue forecast and the competitive pressures in the AI space. The comparison to other AI-focused companies is also telling. While BigBear.ai stock has seen impressive gains, it's important to remember that it is operating in a crowded field with established giants like Palantir and a host of other agile startups. The competition for talent and contracts is fierce, and BigBear.ai will need to demonstrate a clear and sustainable competitive advantage to thrive in the long term. So, what does the future hold for BigBear.ai? The company is at a critical juncture. It has a compelling story and operates in a sector with immense potential. The recent surge in its stock price demonstrates the market's appetite for AI-related investments. However, the company's financial performance is a major concern. The declining revenues and widening losses cannot be sustained indefinitely. To justify its current valuation and achieve long-term success, BigBear.ai will need to demonstrate a clear path to profitability. This will require a combination of securing new, high-margin contracts, improving operational efficiency, and potentially diversifying its customer base beyond its heavy reliance on government agencies. For investors, this is a classic case of expectation versus reality. The expectation is that BigBear.ai is a high-growth AI powerhouse. The reality is that it is a company with some promising technology but significant financial headwinds. The path forward is fraught with both opportunities and risks. A major new government contract or successful expansion into the commercial sector could send the stock soaring. Conversely, a continued decline in revenue or a failure to control costs could lead to a sharp correction. The high volatility of the stock, as evidenced by its recent price swings, is a clear indication of the uncertainty surrounding its future. For those considering an investment in BigBear.ai, a thorough and dispassionate analysis is essential. It's not enough to simply be bullish on the AI sector. One must look at the specific fundamentals of the company in question. How is it positioned relative to its competitors? What is its path to profitability? What are the key risks to its business model? These are the questions that should be at the forefront of any investment decision. The convenience of trading on platforms like Robinhood or using a robo-advisor like SoFi's intelligent portfolios shouldn't replace the need for diligent research. Comment below with your thoughts on the future of government-focused AI companies. Do you see them as a stable long-term investment or a high-risk gamble? In conclusion, the story of BigBear.ai is a cautionary tale for the modern investor. The allure of a hot sector and a compelling narrative can often overshadow the importance of sound financial fundamentals. While the recent performance of BBAI has been impressive, it has been largely driven by market sentiment rather than a corresponding improvement in the company's underlying business. The stark contrast between the expectation of a high-flying AI growth stock and the reality of a company with declining revenues and widening losses creates a significant level of risk. The future of BigBear.ai is far from certain. It could very well overcome its current challenges and emerge as a leader in the AI-powered analytics space. However, it could also become another casualty of a market that has become overly enthusiastic about a particular technology without paying too much attention to the individual companies that are trying to capitalize on it. For now, the expectation of a straightforward path to success for BigBear.ai remains just that, an expectation. The reality is much more complex and uncertain, and investors would be wise to approach this stock with a healthy dose of skepticism and a deep understanding of the risks involved.